to all traders and welcome back to our market insights video. Today we're going to look at metals and energies. We're going to speak about gold, oil, natural gas, as well as the silver. There seem to be not just increasing tensions between US and China that might be supporting the prices of gold, but also early lockdown concerns and whether they are going to increase infection rates, especially in the US. Now, with concerns, of course, with the premature reopening, the biggest question here is whether we should be really expecting a V-shaped recovery, which doesn't seem to be the case, to be honest, if we look at how China is performing and how China's cases are increasing after one full month of easing lockdown measures. Now, on the oil market, we've had oil also rising a little bit yesterday because we've had Saudi Arabia and other countries actually promising to go ahead with more production cuts. API didn't really move the markets, to be honest. We had a huge inventory again, and we're expecting the EIA today, of course, to come through. That might coincide very well with what we're expecting to see on our charts as well. We also had actually yesterday the CPI inflation coming from the US, which was pretty bad. That's why we've seen the gold prices supported. Now, we were expecting 3, 4, and 5, right? Last time we saw gold, we were down here, if I'm not mistaken. We're expecting this to be an ABC. Obviously, with this move to the upside and the bounce over here, we can't really miss a triangular formation here. That means most likely we're going to see prices moving lower, close to the 1684. This is the 23.6 Fibonacci retracements of wave 3. And then we're going to get wave E over here, which means also 4, and then from there start looking for price to move higher. Now, that high will be obviously a new high. We can expect it to be anywhere above 1750, but I'm actually, to be honest, expecting that to go above the 1800s and then start moving lower. Okay, now we have these very good bullish divergence on the RSI, and that seems to suggest that once prices move down, we're going to get that there. This is going most likely to create a hidden divergence and then start moving higher. We could get a throwback over here. Okay, don't be surprised if we get below the 1684, but I wouldn't think we're going to go below the 1637 or like 42 or so. Okay, now let's have a quick look on oil. We've been expecting this for a while now. Okay, let me just go a little bit closer. There we go. So we looked at this move to the upside the other day. We said about this move becoming a multi-structure to the upside. Also looks like a triangular formation. However, we are lagging compared to gold. We haven't done with wave D yet and wave E. Now, that seems to suggest that we are going to go a little bit higher to around 27 or so, and then drop to around 24, even 2380, which is wave E. We also get a price throwback as well over here, and then start looking for prices to move up. That will be in wave 3, then 4, 5, complete wave A, move down for wave B, and then all the way up for like 40 or so. Now, wave A is probably going to end above the 30 level, okay? I'm actually looking near 32 or so, okay? Because we still haven't done even with wave 3 in the minor degree. So EIA today, we could start moving up before the event, and then with a decline, take that out, and then move higher, right? Now, of course, we always need to follow what's happening with US-China. Again, now US-China is coming on the surface, and then the situation with the OPEC, oil production cuts, and the rest, as you very well know. Silver, we talked about that as well. We were down at 3, we were expecting wave 4, and then looking for wave 5 as well, right? Now, this looks to me as an A, B, and a C that we're expecting to end higher. we've done the 61.8 Fibonacci extension, so we could have ended over here, but this really doesn't look like an impulsive move to the downside. Okay, so for that reason, I'm leaning lowards to that is 1, 2, 3, 4, and we are expecting wave 5. Now, by the looks of it, it looks like this is gonna be an ending triangle. Okay, so I mean, you cannot really get the shapes, accurately displayed on the charts usually, but I'm expecting this now. We've done ABC, ABC, ABC. Most likely, we're gonna see prices move lower to take out that level over here, this horizontal ascending trend line, let's just say. This is also coinciding with a nice RSI signal over here, so a little bit more downside to maybe around 15 or so. Then another move to the upside, take out the 78.6 Fibonacci extension, which is above the 16 level, and then move lower. Now, don't forget, guys, all these patterns we're talking about, obviously they have alternatives, right? But they're discussing what I'm likely leaning towards to actually, and what I've been working on, and what I've been talking for a while. Natural gas, we talked about this move. Okay, this is actually part of the bigger primary wave. Okay, let me just show you quickly. It's 3, right? We're expecting 4, and then another move to the downside. Now, that being said, and we have the first leading triangle. We're expecting wave C to finish on the minor degree. This will be for wave B, and then price will move all the way up. Obviously, break the previous high, to complete wave C, and then move all the way to the downside once again to end wave 5. Now, we've had 1, 2, 3, 4, 5. Wave A is done. We've got a very nice signal on the RSI, and we start moving lower again. Now, because of 2 is a little bit extended, the rule of alternation is already in. So wave 5 can be, we are on wave 5 now, can be expected to end around 159, because this is 58 points Fibonacci extension of this move to the upside. Once we get there, we can start looking for prices to move higher, right? Now, at the same time, we might also get a nice signal over here. Okay, that could turn out to be something like that, while price is moving down, a hidden divergence again, and then look for further signs to enter at the low, pretty much all the way up to at least 2.